July 9th, 2026. Yesterday we ended up the day, I think we ended the day +2 or +1 R from the strategy coming into effect. So we're going to test it again today. We're going to see what would have happened had you followed the strategy today. What would have happened? Notice we only had 2 significant events with regards to critical levels today. And these critical levels are the purple and blue and red horizontal lines. The purple are previous week's critical levels, and the red is the previous day high, pre-market high, and then previous day's high. And then the blue is the previous day low, and then the pre-market low. So we like to see how the price action plays off of these critical levels on the NASDAQ and on the SPY. It works on all things, really, all stocks in the market. And notice what we had: market open. Price action comes up, penetrates straight through pre-market high. We run for a while, come back down, and we penetrate right back through that same level, that pre-market high. You can see there was a little bit of a fight before it did, but then it penetrates straight through, and then it comes to what? The previous week's close. And that is a significant event. And it rejects off of the previous week's close. And just to make sure I'm telling you the right thing, yeah, that is the previous week's close. This one down here is the extreme low of last week, and this is the extreme high of last week. And then these two purple in the middle, this is the open and the close. So anyway, critical level, that's all that matters, honestly. You just have to see how liquidity plays around with these levels. That's literally all that matters. And we reject off of this level. And now this is a very bullish sign, and we just had a bearish sign, right? So the next time price hits this red line, which is the pre-market high, we're going to get a lot of valuable information, and we'll probably see a consolidation. So the price comes up, rejects off of it, back up, fights with it, consolidation begins, and then we get our first patchwork rejection off of this level. Does it ever come back for the rest of the day? No, it doesn't. It runs. So this is what we see time and time again. Whenever you see a consolidation around a level, you should be anticipating an upward move. Why? We just rejected to the upside off of this critical weekly level, and then we get a consolidation around this. We're looking for an explosive move to the upside. That's what we want to look for. On a 2-minute chart, you would want to see some sort of volume confluence occurring while we're breaking away from it. And look what happens. As we're breaking away to the downside, we see some heavy selling. As we are breaking away to the upside, we see a lot of buying, majority buying. So this consolidation occurs, and you just look at the volume, and it all starts to make sense time and time again. The same thing. Same things happen, just in different ways. Same story, different patterns. And let's get into the actual strategy. When did the first alignment come into play? When is the momentum all going the same direction? Right at market open. It happened right here. The 1 hour momentum is aligned with an increasing, expanding 15-minute momentum, which is aligned with an increasing 5-minute momentum. So then on a 1-minute chart, you look for that first realignment to occur. Selling off, not aligned, realignment. And that's your entry. That is your entry. Now, we have a few ways of managing these kinds of trades. This is the entry candle. This is the trigger on a 1-minute chart, right at the beginning of the market, less than 30 minutes into the market. And what you want to do is you want to gauge the size of the candle. This candle is a monster candle. This is a monster candle. This is a monster candle. There's normal candles, and then there's monster candles. And you gotta be able to see it with your eyes, which is called average true range. It's another indicator if you want to not see it with your eyes and just have an indicator. If you have a candle over the average true range, if you have a monster size candle, this is going to mean that most of the move has probably already happened, and your chances of hitting a 1-to-1 go down dramatically. This was a loss. It never hit a 1-to-1. This was a loss. Now, you could have known that you were overextended. You were above this critical level, overextended. We had a monster candle. Yeah, I'll take the trade, but maybe I'll tighten the 1-to-1 window a little bit. Right? Maybe I'll tighten the 1-to-1 window. That could have been a win. But it was a loss, so we're down 1 hour in the day. Moving forward, when does the next alignment occur? We need everything to be going the same direction. Literally expanding and going the same direction. When does that happen? Well, the 15 is now selling off. The 5-minute is now going the wrong direction. So we skip forward in time. Now we're going to a 2-minute chart because we're getting later in the day. Skip forward in time, skip forward in time. Nothing is aligned. The 15 is still going down, about to cross over. And the 5-minute is still in the red, but it's going with us again. That's good. It's going with us. See how it's expanding in the direction of the trade? Now, we're coming back up to this critical level like I talked about earlier. Remember this pre-market high? We're coming up to this level at this very point in time. The 15, or the 5 rather, starts to actually have a crossover. That's a significant event. Very significant event. The 15 is in the green, and it's pulling back. We want to wait till it's pulled back and printed. Now it's printed. So now we have full momentum alignment to the upside. It's literally happening right now. The full alignment is occurring right now. Why? The 15 is now re-expanding. The 5 has literally just had a crossover. Okay? We're rejecting off of this critical level. Everything is setting up for us. We don't know where the price is going to go from here, but we know that at this very point, at 10:20, the first full alignment has begun after that first trade, which was a loss. This trade was a loss right here. Down 1 hour on the day. So we come to this very point. Now we're at a full alignment. Now we're waiting for the execution time frame, the 2-minute, to realign to the upside. Where does that happen? Right here. At 10:24. Right here. That, my friends, is the entry you've been waiting for. Now, did the 1-to-1 win? Of course the 1-to-1 won. Of course. Did the price ever come back to the entry? It did, right here. How far did it go before coming back to the entry? It went 2R. It ran 2R. Okay. That is a win. We're going to mark that as a win for a 1-to-1 ratio. Now we go forward in the day. After that win hits, wait for that win to hit, and then you move forward past that point. That was where the win was, right? Let's see. Yeah, the win happens there. Absolutely. So we go forward in time. The next alignment on this execution time frame occurs here. Selling off, selling off, selling off, realignment to the upside. But look what the 5-minute is telling you at this time. The 5-minute is now tapering down. Telling you, warning, be careful, don't do it. You might want to avoid this one. Don't do it, right? It's tapering off, so we don't take the trade. We don't take the trade. Now, there was an embedded entry within this first win that just occurred, which was this realignment right here. Selling off, selling off, selling off, realignment to the upside in momentum. So that was another win within a win. But you only count one, obviously, because we're saying the first trade was still unfolding. But it's just good to be able to see all of those entries. So far we're even on the day. Down 1 on this first trade, and now we're back to even because we just won a trade. So we're waiting. We want that 5 to be expanding in the same direction again. And that doesn't happen until much later. Look, that doesn't happen until 12:10. 12:10 it begins to happen. Right about here. 12:10, it's now expanding back towards the upside. And we're in the midst of a huge run-up right now. Huge candles, huge movement going on. So the next alignment would be right here. And that's an overextended trade right there, but it is right here nonetheless. We gotta be honest with ourselves. Why is this in alignment? Because look, we're tapering off, tapering off, tapering off. One realignment right there. Now we're very oversold at this point. We're super oversold, right? Look at this MACD level. Very oversold. So you can skip those trades. Because why? Because you're oversold. That's why. Or you could even maybe reduce your target by a little bit. Would this have won had you taken the trade? Would this have achieved a 1-to-1 ratio? No, it would have been a loser. Now we're back down to -1 on the day. -1 on the day. Okay. Was there another alignment that occurs for the rest of the day? No, because the 15 and the 5 never come back into the green. So that was all. That was literally all of the trades today. There was a loser in the beginning, was two winners, technically one in the middle of the day, and then there was a loser at the end of the day. Now, could you have made some other trades happen with the 15 crossing over and the 5 expanding in your direction? Would that entry have been right here? Maybe. Yes. You could have gotten another win on the day by using what? A 15-minute crossover, waiting for the 15 to cross over, waiting for the 5 to start tapering, start holding, start showing some sign of strength, and then wait for a realignment on the execution time frame right there. Yes, that would have been a win, but it wasn't the official strategy because the 1 hour is in the green, so we're supposed to be looking for longs. But either way, we finished the day down 1R, and that was everything for July 9th. I'll see you in the next one.